Futures ahead of the live market open in just a few seconds. We had seen all futures contracts higher across Europe. We do see now a red arrow on FTSE futures, although it's obviously very slight. We see 0.4% gain on the Euro Stoxx 50, 0.4% gain on CAC 40 futures, and almost a 0.25% gain on DAX futures. It should be noted that the pound is higher right now against the dollar. That doesn't help British stocks, and the dollar index, the broader basket, is lower, which may be now a risk on signal. We'll discuss that imminently here. Take a look at the equity indexes as they open up live on your global macro movers screen. They're in your left-hand column there. The IBEX up almost 0.2% at the start of trade. The FTSE gaining almost 0.1% at the start of trade. We have the DAX starting out down, but picking up and rising, and the CAC 40 also continuing gains, now up more than 0.5%. So for the most part, European equity indexes are higher, as global equities really flirt with all-time highs on rebounding corporate profits and hopes for a similar recovery on the economic front. There was a lot of optimism out of central banks yesterday. Joining us now to discuss all of this is Louise Dudley, international at Federated Hermes, global equity portfolio manager. Louise, it seems like there have been so many red flags. There have been so many bubbles. This market reminded me yesterday a bit of Veuve Clicquot. Is there a concern that we're going to see it burst anytime soon?
So definitely there are some concerns that that is the case, but the majority seems to think that there's more to go within this kind of rally. So certainly some people talking even about 20% upside from here. So we can see that coming through. Definitely earnings supporting some of that strength so far within earnings season. We're about 50% done across the S&P 500.
Yeah, in terms of the, good morning, Louise. In terms of the earnings story then, and what we've learned from earnings season so far, we talked yesterday about how companies haven't necessarily been rewarded for the backward-looking numbers. It's been all about the outlook. But our previous guest also making the point that we haven't necessarily seen all that many upgrades. There's quite a lot of tentative action, I suppose, not being taken then by analysts out there when they look at this earnings season. How has it gone down with you?
Yeah, so it is a challenge. We are still seeing some companies not even producing any guidance, which is something that obviously happened quite a lot in the middle of last year when they said there was too much uncertainty that they couldn't even provide any guidance. But the fact that we have seen this kind of strong beat, so far kind of 80+% beating relative to the typical beat of around 75%. So that gives us some strength. And I think, as you say, definitely not looking at what's happened last year, not necessarily even looking at the kind of year-on-year numbers, but definitely focusing on the next 6 months and beyond that.
How much do you think government stimulus is necessary still at this point? I mean, for example, in Germany, it's very complicated, but we're going to start debating the debt brake. So maybe the government will be able to spend more, maybe it won't. And in the US, of course, you're talking about the $1.9 trillion package that Biden wants to get through. It looks terribly difficult to me, but the market seems optimistic. How important is the bet that this stimulus comes through?
So it's particularly important for small businesses, which particularly in the US kind of really drive that kind of underlying economy within the US, which I think is why, Biden is so keen to keep it rolling at that high level. But so far in terms of jobless, and obviously we'll see some more numbers today, things seem to be a bit better than people expected. December certainly was better than people expected from a kind of an overall retail spending perspective. So overall, as was mentioned earlier, definitely this kind of risk-on environment seems to be where we are. A lot of the macro indicators pointing towards that risk-on behavior for investors. People talking about buying the dips when we had that kind of sell-off last week, and then obviously this week has been quite strong.
And what kind of relationship, thinking about fiscal stimulus, where the US economy goes from here, what kind of relationship does the dollar, or do you expect the dollar to have with stocks? We've seen, of course, this negative correlation as the dollar was a haven for so long, but the negative correlation seems to be breaking down just a little bit. And certainly in January and of late, we've seen stocks rise and also the dollar rise. What's your expectation for the dollar then, Louise?
So I think certainly it has tempered a bit, but as you mentioned, we've been on this kind of longer term trend. So maybe it's to be expected that we'll get some back, but generally we are very bullish on the US economy relative to the rest of the world. So definitely continue to see maybe some of that feeding through. Inflation is a concern, but I would say it's more, when it might happen. It seems to be somewhat tempered on inflation, though it is something that investors are looking at.
Of course, we've seen massive underperformance. Well, we've always seen underperformance in European indexes, but we've seen real underperformance when you look at the FTSE, Louise. And we noticed the UK government is considering changes to stock market rules in order to make it easier for technology companies, e-commerce companies, biotech, science-based companies to do their IPOs in London. What do you think about the proposed changes, and do you support that?
So although it might seem positive in the short term in terms of attracting some of those names, I think we're very cautious about kind of any breakdown in governance standards. The UK has always held itself out as being, world class in terms of some of the corporate governance, some of the stakeholder, shareholder rights being enforced, that individual accountability for board members, all of that, is very much being protected. So I think we'd be disappointed to see the UK kind of caving on some of those issues, because I think what we've seen from Hong Kong is that actually you can work with these companies to come up with a solution, and certainly we wouldn't want to see too much relaxing and too much kind of giving away some of those rights which we think are important.
Okay, Louise, thanks very much. Louise Dudley, International at Federated Hermes, Global Equities Portfolio Manager. Thanks for your thoughts so far. Stay with us on the programme. More to come with Louise shortly. Coming up, the GameStop bubble deflates, with the stock sinking another 42% in yesterday's trade. So has the froth in markets gone or just dispersed? We'll talk a little more about the broader implications or not of the retail frenzy. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are 10 minutes into the session right now and looking at gains, not huge gains, but continued gains on the Stocks Europe 600, 0.2%. That's the broader benchmark index. If you look under the hood a little bit and check out which industry groups are gaining the most, you can see technology right now is one of the leaders, up 0.7%. By the way, NASDAQ futures are the biggest gainers of the three major equity indexes, futures contracts in the U.S. So technology looks to be a leader there as well, or maybe as we open up. Let's get the Bloomberg Business Flash. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. BNP Paribas reported worse than expected debt trading revenue in the fourth quarter. The French bank is warning that the client activity that helped drive earnings last year is unlikely to continue. BNP is signaling an uncertain outlook as the pandemic continues to lock down large parts of Europe. Snap shares are down in late trading despite a jump in sales. The Snapchat owner is warning of risks to advertising growth from changes to Apple's data collection rules. Snap stock has tripled in value in the past year, but investors are concerned the gains are unsustainable and that growth might slow as lockdowns are eased and people use their phones less. Peloton says it can't keep up with surging demand for its exercise machines. The bike firm has seen its first billion-dollar sales quarter, but is warning about profit being squeezed as it tries to fix its supply issues. It currently says it's operating at longer than acceptable wait times, but is investing $100 million in delivery over the next 6 months. That's your Bloomberg Business Flash. Matt, Anna.
Exhausting thought. Laura, thank you very much. Laura Wright here in London. Now, has the retail frenzy finally run out of steam? GameStop plunged again yesterday, taking its weekly losses to, well, another level. You can see it down over 4 days, down 83.5%. Let's think about the broader context here and talk to Louise Dudley from International at Federated Hermes. Louise, do you still see any knock-on impacts from what we saw around GameStop? I suppose some of our guests have taken this in two ways. Some concerned about what's going on in markets, and others just very interested to see this boom in retail investor flows. I guess both could be relevant at the same time.
Yes, so I think the rise in retail flows is something that we expect to continue to get stronger. It's something that's quite prevalent within the Asian market particularly. So we've actually got some quite good data that we can look at over there and how it impacts. But one of the big things is how it impacts sentiment around some of these names and how divergent it can be from some of the fundamentals, which means that, you know, there may be some losers who come out of this. And I think that will maybe caution some investors. But certainly reading today in terms of within the UK market, young investors seem to be flocking to some of these kind of broker sites. Which, you know, personally, I feel like we should have a bit of caution around that. You know, who is responsible? You know, how much education is there? How much kind of transparency, compliance goes through these things? And are we doing enough to protect consumers within some exceptional volatility that is, you know, really remarkable? But overall, you know, the only thing that we're really most worried about is when things really get kind of very disconnected from the underlying fundamentals, which can lead to opportunities for us as kind of institutional investors.
Can you see any benefits from this? I mean, basically, it looks like right now with GameStop and with others, you had these kind of organized, I'll say attacks for lack of a better word, but yesterday people started talking about low volume Chinese ADRs, and all of a sudden ATA Creativity Global jumped up over 1,000% because of talk on Reddit, because of talk on Discord, because of talk on Facebook. Can you see that being spun positively, especially in terms of ESG investing?
So perhaps, I think we know that retail investors are a lot more kind of closely aligned to invest alongside their values. So maybe there's certain names that they wouldn't want to buy. But given that these tend to be quite short-term, kind of looking for the short-term gains, that tends to be not so aligned with kind of the underlying ESG thesis, where good companies are going to outperform in the longer term, particularly kind of some of these more kind of structural sustainability trends that are coming in.
In terms of the conviction trades that you have at the moment, Louise, the auto industry seems to be coming back more strongly than you'd previously expected. Where do you expect the gains to be won there? Who do you expect to benefit?
Yeah, so one area that we're looking at quite strongly, where we have kind of big positions, are around semiconductor names. So we know there is a shortage of chips going into the autos industry because it has come back that much quicker than people expected. Even yesterday, we had Ford coming out saying it might hinder their production value going forward because of the shortage of chips going into everything from cars, but also those kind of work from home devices that we're all kind of stocking up on in these periods that as it gets more extended. So that is something where there is a shortage, there is that supply squeeze, then prices get better, then those companies get rewarded. And it's something that can't come online too quickly. We know there is a growth in supply coming, but that's probably not going to be for a while. So that's certainly an area of conviction for us.
All right, Louise, thanks very much. Louise Dudley, they're international at Federated Hermes Global Equities Portfolio Manager. She'll continue the conversation with Anna and myself on Bloomberg Radio at 9 a.m. UK time. You can tune into that on London DAB digital radio, or you can just use the internet like anybody and just Google Bloomberg Radio. Coming up, the EU lags in the vaccine race, and that delay could cost the bloc billions of dollars, as well as, of course, thousands of lives. We're going to speak to the European People's Party Chair Manfred Weber next. This is Bloomberg.
Welcome back. This is Bloomberg Markets, the European Open, 20 minutes, let's call it, into our trading session. You can see European equity markets on the front foot, fairly flat in London and in Frankfurt, doing a little better in Paris as we close the week with a bit of an upside flourish. There are more than 500 miles between Frankfurt, home of the European Central Bank, and Rome, the seat of Italy's government. Not just geographically, but in terms of policy and priorities, there is also a gap. As Mario Draghi comes out of retirement to lead Italy through its latest crisis, will his style be as effective on home soil? In the past, his messaging has been rather subtle.
Regarding fiscal policies, fiscal policy should become the main instrument. Governments with fiscal space should act in an effective and timely manner. So now it's high time, I think, for the fiscal policy to take charge.
Yeah, it's going to be really fascinating, isn't it, Matt, to see how somebody who's operated in one sphere of public life takes those skills, as huge as they are, and applies them to another. I mean, if you haven't been in politics, if you're not used to the rough and tumble of politics, he's used to a different kind of politics, I am sure, but it is going to be different, isn't it? Seeing him in a different role. I mean, it occurred to me, I've watched him in action at the ECB for years. I don't think I've barely ever heard him speak Italian, so we're going to have to get used to that for a start.
Yes, he spoke English for the most part at the ECB. I think the interesting thing is his experience is so broad. You know, he's been a professor. He's worked, obviously, in government at the Treasury in Italy. He worked at Goldman Sachs. And, of course, he ran the ECB with the kind of strength that endeared him to a lot of people who are pro-EU with his whatever it takes speech. So maybe he'll do whatever it takes when it comes to Italy if they give him the chance. Of course, it's more of a position that the people need to approve. Let's talk about this right now with Maria Tadeo, our reporter in Brussels. She's joined by Manfred Weber. Maria?
Yes, let's talk about the European vaccination campaign, Matt, which is dominating still the news flow here in continental Europe. And we are joined indeed by Manfred Weber, who is the head of the European People's Party in the European Parliament. Mr. Weber, thank you so much for joining us on Bloomberg. And, you know, this week has been a very difficult week for the European Commission, for the management at the top of the Commission. I do wonder at this stage, when you look at Ursula von der Leyen, is she still the right person to lead this vaccination effort?
We are a team, and we're doing all the steps together. And we know that Europe is currently having on the shoulder a huge responsibility about to guarantee that all Europeans have an equal access to vaccination. So there is criticism that's allowed in democracy, and we have to deal now with the things. We have to answer this, and that means mainly increase production capacity. We have to create now a big alliance of pharmaceutical companies to really increase production.
An increased production, and you know, you make a good point there. But before we get to that, you know, I just want to insist on that point around Ursula von der Leyen. In your view, is this chapter now closed? The whole controversy around her, is this over in terms of the European People's Party?
So Ursula von der Leyen is part of my political family, but I also see in the other political groups, socialists and also a big part of liberals, and also on member states levels, that all the steps we did in the past were joint steps. We did it together. And that's why, yes, there is need of criticism, and we have to learn out of these things, but the general approach was right. And I give you one example. To have no one first and second class European, to have European-wide the same date to start vaccination was a great success for Europe. We have today a kind of a debate, even a kind of a war between Great Britain and the European Union, who gets the AstraZeneca vaccines. And I tell you, it's great to see that we have not a similar debate between Germany and France, Portugal and Spain, Austria and Czech Republic. That's good. We have a joint approach, and that is a big success for Europe.
Right, and let's now focus on the production, because this week, and this has really caught my eye, we've seen a number of companies, Novartis, Sanofi, Bayer, all jumping in and saying we're going to help to produce vaccines from rival labs. How can you get more companies to do this? It seems like it's the obvious way to scale up quickly.
The first step is that we have to remind the companies to keep their promises. So AstraZeneca with Pfizer is a very reliable partner. So they are increasing now production, and they are increasing also the deliver on the vaccines now. We have the biggest problem with AstraZeneca, and there we are extremely critical because the feeling is among politicians and when we look to the contracts is that they are mistreating in a way the European Union. So our treaty is probably less important for AstraZeneca than it is for the treaty with Great Britain. And that is what we cannot accept. So we need a fair treatment. They have signed a contract. They have signed the agreement with the European Union, and we have to remind them about their credibility to really deliver now. And another aspect is that we have now the export scheme in mind, where we control what is going from Europe to the rest of the world. We are ready to distribute and to deliver European productions to the rest of the world. For example, Canada is only getting vaccines from Europe and not from the United States. But that must be the same for the others. So that's why Great Britain and also America, first of all, where we have a full export ban currently in place, must also be ready for a fair distribution on the global market.
And that's been your message, and you've made it very clear that this has got to be about fair distribution. Mr. Weber, that's all we have time for today, but we appreciate you for coming on the show. Thank you so much. Anna?
Thank you very much, Maria, as well, for bringing us that interview. Coming up on the programme, Skanska's operating profit in focus. We'll speak to the CEO next. This is Bloomberg. Welcome back to the European Market Open, 30 minutes into Friday's European equity trading session. And you can see the French market outperforming the others. The FTSE and the DAX fairly flat to negative. The CAC actually up by 0.6%. So European equity markets finishing with a bit of a flourish. To the upside, we see travel and leisure moving higher. Consumer products and services also getting a boost. So some of those sectors that have been most beaten up looking to make some gains. To the downside, we see chemicals and telecoms doing the worst. But there's a slight bias towards the upside, isn't there, in terms of the sector breakdown. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. The UK will require travellers from coronavirus hotspots to quarantine starting February 15th. Arrivals from countries on the UK's travel list will need to isolate for 10 days in government-approved accommodation. The news comes amid confusion over how soon the UK government would implement the policy that it announced last month. The US House has voted to strip Republican Marjorie Taylor Greene of her committee seats for embracing conspiracy theories and violence against Democrats. 11 Republicans voted with the Democrats. Of others, few defended her words, but some voted against, saying it set a bad precedent. President Trump once declared Greene a future Republican star. German Chancellor Angela Merkel says it's still too soon to ease the lockdown of Europe's largest economy. The pandemic is showing signs of easing, but the longtime leader says the nation must be very careful in this last stretch. The Chancellor is meeting with regional leaders next week to discuss if the current lockdown should continue. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thanks very much. Laura right there in London with your First Word News. Now, Skanska's full-year operating profit has beaten estimates. Scandinavia's largest builder has also hiked its dividend. The company has also said that current construction demand is solid. Skanska shares are dropping, however, this morning. And joining us now to discuss is Anders Danielsson, CEO and president of the company. Anders, thanks so much for your time. Why do you think the market is reacting negatively to record profit and a dividend hike?
I'm not the right person to comment on the share price, but I'm very satisfied with the year. We have a record year, a record profit. We have a strong cash flow and a strong balance sheet. So, and we also are able to have an ordinary dividend and also an extra dividend. And if I look into the stream, construction is solid. We have been able during the pandemic to keep the operation up and running. The project has been up and running in a safe way. And also our project development, residential development, commercial development are on a very good level, way above our targets. And the gain on sale in commercial development is actually the highest ever.
That's interesting. And I want to ask you also about the impact that the pandemic has had on the leasing activity then, Anders. You've said that there's been a negative impact on leasing activity in general, many tenants postponing some of those decisions about office space. And I wonder how you see that developing from here.
Yes, that has been the case during the pandemic, that we still have a good dialogue with the tenants, potential tenants, and but they are postponing their decision. And due to uncertainties in the market, how the market will look like and how will it impact their own operations, of course. And I expect that to continue during the pandemic.
Yeah, I look at, I mean, I know you don't want to comment on the share price, but of course you do you're the chief representative of shareholders, and that's the value of their investment. It's almost back to a record high. If I look at a longer chart here, Anders, you're back to basically pre-pandemic levels, and I wonder if you see the business in the same way, demand in the same way. Are you going to be looking at revenues in the same way, back to pre-pandemic levels, say this year, next year?
We have been working for 2-3 years now to improve the margins in the construction stream, and we have been successful in that. We have been proven quarter by quarter have we improved the margin, and we're going for our target in the future, definitely. So I think we can show stability there. We have lower risk in the portfolio, and we also proven for many years now that we can deliver very healthy result in the project development, both in residential development and in construction or commercial development. And our ambition is to grow that part of the business, to invest more because it's so good return. We have a target of 10% return on capital employed, and we are way above those and have been for many years now.
Okay, and Nordic construction seems to be an area that is delivering for you, Anders. Do you see any reasons to be concerned about the continuation of that strong performance in the Nordic construction industry?
No, we are performing on a very high level in the Nordic construction operations, and I expect that to continue. I actually see some potential for improved margins, especially in Sweden. So that's, I think that. But the market, we have to adjust to the market, and I expect the market to be weaker when it comes to commercial construction due to the pandemic. So we have to adjust to that.
Anders, thanks so much for your time. Anders Danielsson there, Skanska CEO and president, talking to us after the company posted, well, not only a record, raised its dividend, but also boosted its profits to a record. Coming up, with the sluggish vaccine rollout set to cost the EU billions, how will the region's banking sector hold up? We'll discuss with Elke Koenig, head of the European Commission's Single Resolution Board. Next, this is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. 40 minutes into the session, we're looking at green arrows across European stocks right now, with the 600, the broader benchmark, up about 0.3%. Travel and leisure sectors is up right now, 1.6% the gain there, and the CAC 40 in France is up about 0.75%. Let's get the Bloomberg Business Flash. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Robinhood has removed the limits of buying shares of GameStop and AMC, the stocks at the center of the recent frenzy. Robinhood's temporary restrictions caused an outcry among day traders who said the broker had sided with hedge funds over its customers. GameStop has plunged over 80% so far this week, with AMC also down nearly 50%. Snap shares are down in late trading despite a jump in sales. The Snapchat owner is warning of risks to advertising growth from changes to Apple's data collection rules. Snap stock has tripled in value in the past year, but investors are concerned the gains are unsustainable and that growth might slow as lockdowns are eased and people use their phones less. The biggest technology IPO since Uber, Kuaishou Technology, a short video startup backed by Tencent, has raised $5.4 billion and attracted hundreds of billions of dollars of orders. It skyrocketed at its debut, opening nearly 200% higher. That gives it a price tag to rival that of TikTok owner ByteDance. That's your Bloomberg Business Flash. Matt, Anna.
Thank you very much, Laura Wright, here in London. Let's quickly check on the markets for you. We've got some strength coming through, certainly in the Paris market. The Stoxx 600 moving to the upside, and we do see some strength coming through in Paris. We have Sanofi, Vinci moving higher, some of the luxury stocks that have been much talked about and beaten up, of course, moving to the upside. Sanofi moving higher as analysts cheer the outlook ahead of the Capital Markets Day to come for that particular business. We've got an outlook statement. We've got results coming through from that business. Let's move on. We've had some bank earnings rolling in this morning. Among them was BNP Paribas, which is revamping its top management ahead of a new strategic plan. But just how well equipped is Europe's banking sector to deal with the economic fallout from the pandemic? Joining us now, I'm pleased to say, is Elke Koenig, head of the European Commission's Single Resolution Board. Elke, good to speak to you. Thanks for joining us on Bloomberg TV. If the pandemic has been a test of Europe's banking architecture, how do you think Europe has performed against that test?
First of all, good morning, and thank you for having me. I think, to answer your question bluntly, I think we have performed, or the banking industry in general has performed very well for the time being. The banking industry is part of the solution and not, as it had been in 2007 and 2008, the part of the problem. So I think all the reform work done since has paid off, and all the efforts also done by the banks.
I think, Elke, good morning. I think the market would agree with you on that. On the other hand, we have started to see some big losses in banks that are especially focused on consumer lending. And I wonder if that doesn't become a problem later in the year, especially if we start to see more bankruptcies in the small and medium enterprises, the Mittelstand, so to speak. Are you concerned that we need to increase the Single Resolution Fund for the case that something goes wrong?
Can we perhaps disentangle Single Resolution Fund from your first part of the question? Of course, I think the SSM, so the supervisor, the Commission, we are all very carefully monitoring markets. There has been so much support, fiscal support to the real economy, which also shielded the banks in 2020 and till now. But at some point, you will see non-performing loans filtering in. Now, it will not be uniform because there are some industries that perform excellent. Some other industries, and you mentioned some, are in real difficulty. So non-performing loans will be a topic to come or starting to come. But then the second question is how to deal with the Single Resolution Fund. For us, I could make my answer very easy. We are a rule taker. There is a legal framework which says that we have to set up the fund to 1% of covered deposits by 2024. And we are doing so. Of course, you could argue more is better, but you hear also the industry saying, but at this time, it's quite a burden. Here, I would say we are the rule takers and we are carefully just following this.
Your rule takers, Elke, so do you have a sense of when we're going to hear more about this? When are banks going to know about their contributions? When will they get more information? Because some of them are basing some cost-cutting plans around this.
Yes, I know, but I'm not sure whether the contribution to the Single Resolution Fund are the reasoning for cost cutting or whether they are just a nice wrapping paper for this. Let me, to be very clear, 1% of covered deposits, that's known to the industry, and the industry in last years has been remarkably good in estimating what this means, particularly for them. One factor which is perhaps interesting for your audience is in 2019, we saw quite an increase in deposits. We were a bit wondering whether this might be a one-off, but 2020, during the pandemic, covered deposits have substantially increased across Europe. So banks are actually seeing more liquidity in more covered deposits, which will have to be reflected in our 21 calculation. And as I said, there is very limited room for us. If there is any ideas around how to flatten this, now it's again clear we have to come to 1% of covered deposits by 2024, unless there is a political agreement for, well, whatever politicians might think. The industry is asking for a holiday for 1 year. The industry is asking for a cap. But as said, all this needs a change in the legal requirements, and I'm not taking a position here.
So without any change in the legal requirements, the number will increase in 2021?
Yes. That's a very simple answer. It will definitely not decrease. I would assume it will increase because deposits have substantially increased.
So, Elke, you point out that the banks have been part of the solution during this crisis. I think that's true. I talked to Claudia Buch recently and told her that I really think regulators are the unsung heroes of what we're watching right now, the reason that we're not in another Great Depression. However, I see a lot of banks getting hit hard in terms of their consumer lending portfolio. Some of them making a ton of money on the investment bank side because trading has been, all over the map. Volumes have been insane. Volatility has been great for them. When they make money, they're saying, look, later in the year, we want to pay dividends, which I think, okay, that's interesting. At the same time, they're saying they can't put more money towards the Single Resolution Fund because that money should be used for loans. So they're saying out of one side of the mouth, they want to use the money for loans and it can't be taken up by the Single Resolution Fund. At the other side of their mouth, they're saying they want to pay dividends. Doesn't this concern you?
Well, I think this was a topic, but perhaps let me get back first. I don't think that it's just regulators or supervisors that were the heroes. There's a German saying, if there is a success, it has always got a lot of parents. So let's give credit to probably all involved. Your topic on the one hand, trying to save on the Single Resolution Fund, and on the other hand, to claim that banks want to pay dividends. I think this was a very debatable proposition in 2020, where I bluntly thought paying dividends at the top of a crisis, but at the same time trying to get all kind of leeway did just not fit together. Now, I think the ECB has taken a very moderate approach in saying dividends should not be entirely ruled out, but they need to be backed by substantial earnings and the like. And as I said, to look at the Single Resolution Fund, for me, I can make all kind of interesting consideration there, but in the end, we have a legal framework that ties our hands. And so if there have to be changes, there has to be a political change to this. And honestly, for the time being, I would doubt that we get all member states, everyone behind. But that's not for me to decide.
When you look at another market, Italy, Elke, what do you see there in terms of the way that the regulatory framework will work in Italy? I'm thinking about Monte Paschi, for example. Do you have any concerns on that front?
I have a very simple answer. I'm not commenting on any particular member state, and my constant say on, in particular, when you and others focus on Italy, is there is not one single size. There are very, very well run, very profitable banks, and there are some banks that might have problem that steer not so much perhaps even from the current crisis, but are a bit a legacy of the past. But that holds true in probably a number of countries.
All right, Elke, thanks so much for joining us. Elke Koenig there, head of the Single Resolution Board, talking to us about the banks and the pandemic. Coming up, buying the dip has been hugely popular and often lovingly ridiculed traders' strategy for years. Today, we're asking the question on our Markets Live blog, how large a dip would be too big to buy? We'll put that question to Bloomberg M Live's Ven Ram. This is Bloomberg.
Welcome back to the European Market Open. 53 minutes into a session this Friday that's proven to be fairly positive. Travel and leisure stocks getting some good gains. Luxury, construction, drug makers all pushing the CAC 40 to the upside. So we see some outperformance coming through in Paris. Let's get to Ven Ram, Bloomberg's Markets Live currency and rate strategist, who's with us. And it's currencies I want to start on, Ven. So it's very good to have you with us because I was reading a fascinating story today about how the dollar has morphed into a risk-on currency. So it's gone from being a haven in times of trouble to the place you want to put your money if the US economy is going to do well. So it seems like win-win for the dollar at the moment. What's your view?
I agree with you, Anna. I think it's definitely a win-win situation for the dollar for a couple of reasons. One, it's been way too oversold. In the past year, we have seen it lose value by more than 10%. And that's based particularly on the story of the deficit widening and all that we have already heard. But all that news is already in the price of the dollar. And we've got the reflationary narrative going strong in the U.S. And we have seen Treasury rates climb up pretty sharply so far this year. And if the Treasury curve steepening continues apace, I think that there is definitely more dollar upside from here. So I do think that I've been saying for a long time now, actually, since the the third quarter of last year that the dollar is upside in the first half of 2020. Anna?
I wonder, Ben, if the, you know, in the equity world, big losers, companies that have almost no value at all or no future outlook in terms of their business strategy have been huge winners. And I wonder if you can look at big losers in the FX world as well, or currencies that have been hit hard, and see some lift coming to them too.
Definitely, Matt. I think that, you know, one of the big themes of 2021, as I see it, is that it will be, you know, the laggards of 2020 trumping the gainers of 2020, so to speak. So we saw the Norwegian krone, the Canadian dollar, not doing so well last year. I think that they will do pretty well this year. And I think that there's definitely going to be some strength in the Japanese yen as well. And we've already seen it make a couple of approaches toward the under 100 per dollar handle. And I think that's probably doable at some point this year. So I do think that, as you say, Matt, this will be a year of the laggards trumping the leaders of 2020. Matt,
Ben,
Anna?
thank you so much. Thanks for joining us. Ben Ram from the Bloomberg Markets Live team. Thanks very much for being with us. And Matt, we haven't mentioned all that much this morning that it is non-farm payrolls day, it's jobs day in the US. So we're going to get another sense of just the weak spots, the strengths of the US labor market. 105,000 I see on my Waco screen is the estimate for the number of jobs created in the month of January. That would compare with a drop of 140,000 the prior month.
Yeah, a lot better than a drop. It'll be interesting to see what we get there, especially as the U.S. continues to vaccinate at such a successful rate. The U.S. and the U.K. both doing incredibly well if you look at the vaccination schemes relative to what we see here in Europe. That's it for the European Market Open. Surveillance is up next. This is Bloomberg.
U.S. stocks hit a record high. Market attention turns to January's jobs numbers and signs of a healing labor market. Janet Yellen says market infrastructure was resilient during the GameStop frenzy. Esther George tells Bloomberg vigilance is key. And Bitcoin struggles to extend its record-breaking rally. We'll speak to a crypto finance company, Nexo, about the future of Bitcoin. Well, good morning, everyone. Happy Friday. We've made it to Friday, sometimes just about, but we have made it to Friday, and the focus is now on U.S. jobs, and then it's the last stretch before the weekend. The focus is also on a lot of earnings. There was a slew of earnings. We've had them all week, but actually today we've had some better than expected ones, and that certainly gave a little bit of a lift to the U.S. It's filtering through to Europe. Now, stocks are rising. Again, a lot has to do with earnings. There's maybe just also a little bit of a pricing of a possible stimulus package in the U.S., and Treasury is pretty much steady after a widely watched segment of the yield curve. We talked about it all day yesterday when it steepened to levels last seen in 2015. And finally, crude oil advancing, gold pretty much steady after Thursday's declines. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. U.S. regulators think markets weathered the recent trading frenzy fairly well. Treasury Secretary Janet Yellen convened a meeting of officials about the recent volatility, with the Securities and Exchange Commission agreeing to issue a timely study of recent events. After its recent surge, GameStop has capped another day of heavy losses, pushing its collapse past 80% this week. The UK will require travellers from coronavirus hotspots to quarantine starting on February the 15th. Arrivals from countries on the UK's travel list will need to isolate for 10 days in government-approved accommodation. The news comes amid confusion over how soon the government would implement the policy that it did announce last month. Now, German Chancellor Angela Merkel says it's still too soon to ease the lockdown of Europe's largest economy. The pandemic is showing signs of easing, but the longtime leader says the nation must be very careful in this last stretch. The Chancellor is meeting with regional leaders next week to discuss if the current lockdown should continue. And Sunday's Super Bowl in Tampa presents an experiment in coronavirus immunity. The National Football League is hoping to avoid any large-scale outbreaks at the game. Overall attendance has been capped at 25,000, a record low for football's biggest event. The league has given tickets to 7,500 vaccinated healthcare workers. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, European stocks trading higher. That's as global equities flirt with all-time highs on rebounding corporate profits and hopes for a similar recovery on the economic front. It's also, of course, Jobs Day in the U.S. Well, joining us for more on the markets is our Laura Cooper from our MLive team. Laura, thank you so much for joining us. It's Friday. It's been, less of a roller coaster week maybe than it was last week, but we've had a lot of earnings. We're waiting for the stimulus. And, of course, we want to know about jobs. What is the market focusing on?
Well, certainly, I think the reason why we saw U.S. equities climb to those record highs yesterday was on account of these upbeat earnings, and that is spilling out over into the European session. And I think ultimately, markets are focused on this continued recovery prospects. We did have central banks like the BOE say yesterday that they are, quite optimistic about vaccine rollouts. But I think crucially today, like you mentioned, it's all about payrolls. And will we start to see this upturn after that December outsized decline that really caught markets off guard?
So, Laura, is the story really, like yesterday we did quite a lot about, that yield curve. Is that where it's happening, or is it also earnings?
Well, I certainly think, there was a potential risk that we could see these higher yields begin to weigh into global equities. We did see that in early price action yesterday. But I think so long as that rise in yield is being supported by recovery prospects, we do have inflation expectations continuing to climb higher, I think the Fed and other central banks will largely overlook that, and they'll shift focus. Really, Powell has stated as much, that he's going to focus on ensuring that they don't fall short of the recovery in terms of the employment backdrop.
I know, Laura, you've given us some great insights into what happened with Reddit and, of course, the retail movement there. We heard from Janet Yellen yesterday saying there's no real systematic concerns. Could anything else come up?
Well, certainly, she does want to make sure that markets are functioning properly and efficiently, and that ultimately these retail investors are protected. So while they don't see any signs of systemic risk now, the financial market system is resilient. They are going to investigate this further. And I think that's just because this retail force has really proven itself to be quite dominant. And I don't think that that's necessarily this one-off trend. If anything, I think we're going to potentially see the regulator scrutiny continue in this particular space.
Laura, thank you so much. Laura Cooper there from our Bloomberg M Live team. And I would urge everyone to go and check out our blog. It's very cool. If you're a Bloomberg user, you just put MLIV, or you can also find it on our website. Now, coming up, how can companies most affected by the economic upheaval of the past 12 months build back stronger? My next guest has more than 30 years experience as a turnaround expert. Our interview with Stefano Aversa, the global vice chair of Alex Partners, is next. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francie Lacqua here in London. Now, a year on since the start of the COVID-19 pandemic, and the borrowing binge continues to pick up steam. About $19.5 trillion has been added to global debt. That heavy spending has meant survival for many companies which otherwise would have collapsed. Now, the rise of these zombie companies is especially apparent in Europe. Bloomberg's Danny Berger reports.
An army of the corporate undead are roaming around Europe. Everyone from London's iconic Carnaby Street to movies and airlines, companies that have been hammered by the pandemic are struggling. They haven't made enough money to pay off their debt. It's a key criteria that most experts use to define a zombie company. That is, firms who are just limping along, surviving only off of government aid and cheap debt. In the UK alone, 500,000 companies are in distress. I spoke about this with Julie Palmer, a Big B's trainer.
If you compare it with previous recessions, this isn't a recession, it's a complete lockdown. So business just hasn't been able to operate. Because of that, the support measures have helped keep businesses alive, but they've not been trading anything like normally. So estimates at the moment range anything between something like 800,000 to 1 million UK businesses, maybe at risk of failure when the support measures fall away.
Now zombie firms are everywhere you look. Here on Carnaby Street, real estate investor Shaftesbury has been struggling to collect rent. They've had to raise more money in order to stay alive. aren't just in the movies anymore. They've also overtaken the theaters. Cineworld is racked with nearly $8 billion worth of debt. Creditors had to give them a lifeline, lending them $750 million in extra funding.
Since the financial crisis in 2008, when we've been carrying a lot of these zombie companies, it's almost stifled the recovery. So what you normally get is these businesses are allowed to fail. They haven't failed because interest rates have been low. The banks have been very supportive, and the government have supported business through things like deferring statutory liabilities through time to pay schemes.
Cheap debt and government aid may have staved off a flood of bankruptcies, but these types of companies can drag down the economy as assets stay tied up in unproductive and barely alive zombie firms.
Well, that was our Danny Berger on Europe's growing zombie company problem. Now, how can companies most affected by the economic upheaval of the past 12 months actually build back stronger? Well, my next guest has more than 30 years experience as a turnaround expert. He heads up the EMEA region for AlixPartners, a global consulting firm that specializes in helping businesses face up to the most complex and critical challenges. Well, I'm very pleased to be welcomed by Stefano Aversa, Global Vice Chair and EMEA Chairs of AlixPartners. Stefano, as always, thank you so much for coming on. We have a lot to talk about, but maybe we start with zombie companies. How much, how do you worry, or how do you view the fact that in a couple of weeks and months, a lot of the furlough programs in Europe will be taken away? What are we going to be left with? How many companies will no longer be viable?
Yes, as you said, and also your colleague said, there have been a very unusual, to say the least, year in 2020. Worldwide, there have been high restructuring. The restructuring of the debt in 2020 has been 116% higher than the year before, and this is worldwide. But if you look at the differences between Europe and US went up 93%, Europe went up 33%. We're talking about 420 billion of debt restructured in Europe, in the world, out of which only a relatively small part in Europe. That means that Europe really went into a lockdown, not only from a physical point of view, but also from a restructuring financial point of view, because of forloaning, because of the protection. Is what the American would call kick the can down the road. And therefore, what we have seen happening in Europe, we might see happening, like often is the case, in a longer period in the next couple of years in Europe.
But Stefano, is it healthy companies that are, going bankrupt or need restructuring because of the pandemic, or was it companies that would have not survived anyway? It would have just taken longer to get there.
It would be more the second case. Companies that were struggling before and that were limping around, and they have been put into, as I said, in a kind of a frozen state. But now they will not be able to survive after that. And to some extent, this is the Schumpeter cleaning that did not happen and happened at every crisis. This crisis has been very unusual because it's been very intense and very abrupt. And therefore, we'll see a lot of instead good companies which, yes, they will end up at the end and at the other side of the crisis with more debt, but with a sound business. So we do expect a pretty fast rebound, particularly in the second part of the year and entering into 2022.
Stefano, you're still one of the most famous people in the world for having restructured automakers at a difficult time. What are the industry groups that today you worry most about? Is there anything, apart from the ones that we know, which is travel and leisure, restaurant business, that you think we haven't focused on enough that will have a very difficult time?
Yes, everybody is now focusing on travel, hospitality, and leisure. Obviously, there are big cases that had to restructure, like airlines, restaurant, hotels, and cruises, theaters. You mentioned some of them. I do think this sector will rebound simply because longer term, the social economic situation goes into that direction. People will want to go back and travel. People will want to spend more time outdoors and enjoying life. What is not going to be recovered the same way would be the business travel. We know that for sure now. And therefore, as you know, the airlines in particular have a significant part of their profit connected to business travel. And that is not going to come back anytime soon. So there will be different recovery. The energy, oil and gas has been another one of the big hit. If I look at the U.S., out of this 400 and actually globally, out of the 420 billion restructure, actually the largest one, 1/4 of it was in the energy space. And so that cleanup will stay. I think it's relatively stabilized, but there is a seismic change in the energy and really the push for renewal. Also with the new administration in US and the Green Deal in Europe. And frankly, I do expect a similar push, even if delayed in China. We'll see renewable taking over more and more space. So the oil and gas companies that will move into that space as BP and others and Snam for gas working and pushing on the hydrogen will have a new life. So I do think that there will be a future. Retail is another sector that has some almost secular trend that will suffer. And lastly, you mentioned automotive. Automotive last year was hit pretty hard, particularly in Europe with minus 25%. China actually is already higher than the year before. There was a fantastic rebound, and US is only single digit down.
Stefano, how much work are you expected to do in Italy, given the possible restructuring and changes that we could see with the new Draghi government?
Yeah, I mean, it's too early to say about the government. There are a lot of hopes for Draghi, is what you have defined actually as the best person for the worst job. And he's famous for his whatever it takes of the 2011. He saved the euro. He's the best person to help save Italy. But he has only 2 years. And the Italian Prime Minister, as you know, doesn't have the same power of the French President or the German Chancellor or the UK Premier. And lastly, he will need a pretty strong majority, which is not granted at the moment. So assuming that this government will go forward, I think he will push much more on investment side. And this is what the companies in Italy will need. Italy, you have a lot of mid-sized companies that are undercapitalized. So not only have availability of debt, which is actually fairly available, but having also the possibility to increase their equity and consolidate.
Fabulous. Thank you so much for all of the update. With some great artwork. I think it's an Andrea Bocelli Renaissance style. We'll have to get Stefano back on to talk about his background. Global Vice Chair there and EMEA Chair at Alex Partners joining us today. Now, coming up next, our conversation with the Moderna co-founder, Noubar Afeyan. We talk vaccines and public health challenges. This is Bloomberg.
in this particular pandemic, certainly once we were afflicted and it was coming on like a tsunami of viral attack, it was too late for sure. And so I think that the steps suggested, especially given the lack of experience that people had, last time this happened was 100 years ago, people barely traveled. And so the conditions were so different that people threw out all the playbooks. And so, yes, I think that there were economic self-preservation, getting the next vote, all sorts of things that motivated, political actors to do what they do. And the World Health Organization was in no position, by the way, in a period where global institutions are under unprecedented attack of their, legitimacy or their usefulness. Of course, it was a perfect storm of conditions that allowed the virus to do maybe not the maximal harm, but damn close to the maximum harm it could have done.
Did you ever dream of finding a vaccine so quickly in the midst of a global pandemic?
No, because I'm so, and the whole team we have here, as well as in our companies, are so focused on platforms as opposed to the output of the platforms, right, that interestingly, we find ourselves, I sometimes liken to people as, we make instruments, and then there's, people that are performers that play music on our instruments. And so because in this case, the instrument now all of a sudden enabled a form of music that is helping the world, we don't fantasize over the music. We actually dream up what would be an instrument that would actually allow beautiful music to be made. I'm using, an artistic analogy, but it really is the same thing. Our focus is the impact comes from the fact that we enable a platform out of which dozens and dozens of solutions come. And so, when the pandemic came, for us, it was a great, I remember it very well, January 21st, my daughter's birthday is the first time I had a discussion with Stéphane Bancel, where he called me from Europe, where he had some discussions for the first time this was being discussed. And I thought, great, here's an opportunity to test our instrument, our platform, mRNA, in a very rapid turnaround application. So we were, of course we had a public health duty to respond, but boy, did we not sit there and say, and 9 months from now, we're going to have a vaccine, and 12 months from now, it's going to be in 100 million people. That is a consequence. Frankly, I think if we had thought about that, we probably would have gotten scared. We didn't think much about that. We thought that's 6 steps beyond where we are. If we just do every single step well, we have a chance of getting there.
My interview there with the Moderna co-founder and chairman, Noubar Afeyan, and you can catch the full interview on Leaders with Lacroix next month. Now, coming up, Mario Draghi faces a public health crisis, a deep recession, and of course an unprecedented buildup of government debt. He also hasn't had the majority in parliament yet, so we'll see exactly what kind of government Mario Draghi can and will form. Well, we'll ask the former boss of the oil giant Eni if Draghi can put Italy back on the road to recovery. Our interview with Paolo Scaroni is up next. This is Bloomberg.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, and politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The UK will require travellers from coronavirus hotspots to quarantine starting on February the 15th. Arrivals from countries on the UK's travel list will need to isolate for 10 days in government-approved accommodation. The news comes amid confusion over how soon the government would implement the policy that was announced last month. Now, the U.S. House of Representatives has voted to strip Republican member Marjorie Taylor Greene of her committee seats for embracing conspiracy theories and threats of violence against Democrats. 11 Republicans voted with the Democrats. Of the others, few defended her words, but some voted against, saying it set a bad precedent. Donald Trump once declared Greene a future Republican star. And Johnson & Johnson is asking U.S. regulators to approve its experimental COVID-19 vaccine for emergency use. If cleared, it would give the U.S. a third vaccine to try to halt the pandemic and could lead to 1 million more doses becoming available. Experts will meet on February the 26th to consider the request. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, there are more than 500 miles between Frankfurt, home of the European Central Bank, and Rome, the seat of Italy's government. Not just geographically, but of course in terms of policy and priorities as well. As Mario Draghi comes out of retirement to lead Italy through its latest crisis, will his style be as effective on home soil? Well, in the past, his messaging has been rather subtle.
Regarding fiscal policies, fiscal policy should become the main instrument. Governments with fiscal space should act in an effective and timely manner. So now it's high time, I think, for the fiscal policy to take charge.
Well, during his time at the ECB, Mario Draghi was clear he wanted fiscal policy to pick up more of the slack. But now that he has the opportunity, will he change his tune? Well, we're well versed in Draghi's monetary policy, but what will his fiscal policy actually look like? Well, let's get the view of someone who spent almost 10 years leading one of Italy's biggest companies. Joining us now is Paolo Scaroni. He's chair of AC Milan, former Eni CEO, and now at Rothschild. Paolo Scaroni, thank you so much for joining us. I know you also speak to a number of politicians in Italy and so have a good pulse on the situation. What kind of government will Mario Draghi actually put in place? Is it a government that will be a technocratic government? Is it trying to fold in the politicians, and how hard will it be?
Well, first of all, I can say that we are sure that there will be a Draghi government. No doubt about that. I'm expecting that he will receive the votes of the Democratic Party, of Forza Italia, of course of Italia Viva Renzi Party, but also from the Five Star Movement. Possibly the League will abstain, so the government will have a large majority. Having said that, I'm expecting Mario Draghi will form a government, a mixed government, a government in which will be some technocrats, but also some politicians, and maybe some very powerful politicians of the parties which will support his government.
Paolo Scaroni, what is his main challenge? So he has a multiple, of things. One is the economy, which he's more used to. The other is really a vaccine rollout, which is something that he's never had to deal with. If you look at the important ministries, what kind of people should he put in place where?
Well, in terms of how to cope with the COVID emergency, expecting that maybe it will keep the minister we have today, just not to change horse such a difficult moment. In total, this minister has been performing reasonably well. It has the situation hands, and I believe that Mario Draghi might consider to keep him in his job. It will certainly have a strong hold on the economy minister, either keeping the job for himself, as it has been the case for Mario Monti a few years ago, or in this job a technocrat, because he is supposed to be the man who will draw the strategy on how Italy will use the 220 billion euros coming from the European Union. This is the key challenge we have in front of us, because these 220 billion euros need to change the country, and I'm sure that Mario Draghi has all the ideas and the instruments to do that.
Who do you see as Minister of Finance, and how important is that job?
Well, you see, I think either Mr. Draghi keeps for himself this job, or he will put in this position a technocrat, somebody that he will trust. For example, one name which has been made has been Mr. Panetta, who is right now in the European Union. I mean, a technocrat that he has known during his long career. So a person that he can trust and will be aligned with his ideas on how to use these funds coming from the European Union.
What happens, Paolo Scaroni, if Mario Draghi actually doesn't have parliamentary support to form a government? What's the likelihood of that?
The likelihood of that, in my view, is close to zero. But if this will happen, according to what the President of the Republic, Mattarella, said, we are going to elections. So let's say this is another reason why I think that we will have a government, because nobody really wants elections right now in Italy. Elections will take possibly 4 months because you have a government in place, and 4 months is too long a period for Italy in this dramatic moment we are living with the pandemic.
Paolo Scaroni, when you look at the challenges ahead, I mean, there are a number of priorities, but is there a danger that actually all political parties are using Mario Draghi to get the hard work done, then we'll blame him for the hard work done for the people that lose their jobs because of restructuring, and we go back to a political mess in Italy?
Well, in Italian politics, you never know what will happen. But let's say I'm expecting Draghi government to last until the end of this period, that is until 2023. So let's say 2 years more, 2 long years more. So if this will happen, there will be time to make the hard stuff, but also to see the results of what has been done. And what will happen in 2023, well, it's very difficult to forecast. In any case, Mr. Draghi accepted this job with the idea of doing something good for the country, not in order to enter into Italian politics, definitely.
Paolo, also just a quick final question, given that you still follow oil, I know, after many years at Eni. What do you make of OPEC Plus deciding that they will try and clear the market? When do we go back to a more normal oil dynamic across the world?
My impression is that the consumption picking up, and as a consequence of that, particularly Saudi Arabia is ready to cut down production in order to keep prices at a level which is reasonable for producers and reasonable for consumers. I'm expecting oil prices to stay between $50 and $60 for all 2021. That's my best forecast. I can see the fact that Saudi Arabia made a cut in production, even if Russia didn't follow, showed the determination with which Saudi Arabia wants to prices at this level. And normally what Saudi Arabia wants is very relevant in the dynamic of oil prices.
Paolo Scaroni, thank you so much for joining us. He is, of course, the Rothschild Group Deputy Chair of AC Milan and former Eni Chief Executive. Now, coming up, we speak to the Nexo co-founder, Anthony Trenchev, about what the future holds for crypto as Bitcoin struggles to extend its record-breaking rally. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Snap shares are down in late trading despite a jump in sales. The Snapchat owner is warning of risks to advertising growth from changes to Apple's data collection rules. Snap stock has tripled in value in the past year, but investors are concerned the gains are unsustainable and that growth might slow as lockdowns are eased and people use their phones less. Peloton says it can't keep up with surging demand for its exercise machines. The bike firm has seen its first billion-dollar sales quarter, but is warning about profit being squeezed as it tries to fix its supply issues. It currently says it's operating at longer than acceptable wait times, but is investing $100 million in delivery over the next 6 months. And BNP Paribas reported worse than expected debt trading revenue in the fourth quarter. The French bank is warning that the client activity that helped drive earnings last year is unlikely to continue. BNP is signaling an uncertain outlook as the pandemic continues to lock down large parts of Europe.
If we roll that fixed income into 2021, well, it is not anticipated that those record levels that we saw in the pandemic environment are to be reproduced. However, we anticipate that the market share that we were able to capture in 2020 will consolidate in 2021.
And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now let's focus on Bitcoin's wild ride. The world's largest cryptocurrency is struggling to extend its record-breaking rally after failing to break through a key resistance level. Now that's after it reached an all-time high of almost $42,000 in early January. So what's next for the Bitcoin roller coaster? Well, joining us now is Anthony Trenchev. He's co-founder and managing director of crypto lender Nexo. Anthony, thank you so much for joining us. First of all, what exactly is the role of Nexo? What is a crypto lender?
A crypto lender is a financial institution that provides banking services to the blockchain space. Our two main products are the crypto-backed loans, meaning you can take out a loan against something such as Bitcoin staked as collateral, which has been great with the current bull run because you tap into the wealth, your crypto wealth, without actually having to sell your crypto. And then the second product is the earned interest product, which in this low interest environment where the Bank of England this morning announces that we should brace ourselves for negative interest rates, we are in a position to pay you up to 12% per year in interest.
Anthony, I guess the concern is that, if you look at crypto-based companies, they've always struggled to bridge to the other side, to banking services, I think as a result of some of the crypto uncertainty, because concerns of like money laundering. How do you actually bridge this gap?
Well, we are a company that tries to do exactly that, to bridge this gap. We are from a very traditional, regulated background. We have been in fintech before the term has even been coined. And truth be told, it's getting easier, with signs from the Department of the Treasury via the OCC, where banks in the US can now custody Bitcoin, with some of the more traditional companies such as PayPal allowing exposure to crypto. The gap between the two is slowly being bridged in a natural way, and there are on and off ramps to crypto and fiat, vice versa. So it has been an incredible year.
Do customers who leave deposits with you enjoy the same protection as High Street? So is there a government deposit guarantee in place?
Not at this stage, although we are working on a bank acquisition, actually two bank acquisitions, one in the US and one in Europe, which will bump up the protections that investors have. Our protection is that we have a business model that actually makes sense. We are deleveraging the system in terms of the loans that we extend are secured by 100%. So for you to take 50K as a loan, somebody on the other side has put in collateral that is 100%, so double that, 100K, and it is I would argue a much better and more natural protection, because the business model protects you and it goes beyond the regulatory guarantee of just 100K or 200K, depending on where you are. It is the fundamentally sound business model and the lack of mystery of where the money that is coming from that gives you this protection.
Yeah, the problem, Anthony, is that I guess it's so volatile, right? The problem is the stability. Do you have worries at some point that actually you're less stable as a lender because you use this collateral, but actually, Bitcoin can go from like 5 to 300,000 and you don't really understand the underlying demand behind it?
Well, crypto is volatile, and volatility is here to stay, but that is one of the reasons its inherent volatility that we're having this conversation right now. That's why we have the deleveraging process. We have very efficient mechanisms at Nexo which ensure that the loan-to-value ratios remain as they should at all times. And we have been in the market since early 2018, which saw a year of Bitcoin declining 86%, and we still managed to make money, and none of us as a company and our clients lost any money. So this is the stress testing in a way that I don't think a traditional bank has been stress tested.
Yeah, who regulates you, and what are your reserve requirements?
Well, we are a global enterprise. We are operating in any jurisdiction apart from the sanctioned countries. So this varies from country to country. We are regulated as a financial institution. In Estonia, we have various consumer lending licenses. In the US, we are pending authorization by the FSA in London. So it really depends on the jurisdiction and where you're based. In Switzerland, we are part of a self-regulatory organization, so it is quite an endeavor on that front, but the team is great and we have had some successes.
I guess it's just, I'm just trying to figure out the reserve requirements because it's a very different business model than you have to some of the other lenders. So can you give us an indication? Is it different from country to country, how much you need in terms of reserve requirements? Or is it something that you go across the board?
Well, it is not, we don't have strict reserve requirements like you would have for fractional reserve banking in the banking sector, like what you traditionally would have in place. But we have excess of liquidity, the assets and that we have, and due to the under-leveraging of the system, we have more than capital adequacy and it exceeds all liabilities. But there are no strict rules as you would have in the banking sector set in stone and that the regulator would look at right now.
Thank you so much for the wonderful conversation as we try to understand exactly what these crypto assets actually become. Anthony Trenchev, they're the co-founder, managing director at Nexo. And also a special thanks to Eddie van der Walt, who's a bit of a Bitcoin expert and every day tries to brief me as I try to understand a bit more about the space as well. Coming up, protecting investors, that's a primary concern for U.S. Treasury Secretary Janet Yellen in light of the recent Reddit-fueled rally in certain stocks. More on that next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
We need to understand deeply what happened before we go to action, but certainly we're looking carefully at these events. We really need to make sure that our financial markets are functioning properly, efficiently, and that investors are protected.
That was the U.S. Treasury Secretary Janet Yellen on protecting investors. Those comments come ahead of her meeting with the SEC and CFTC regulators to discuss the recent events surrounding GameStop. Now let's get more on the GameStop saga with our very own Danny Berger. So Danny, Yellen says that the markets are resilient. Could we actually see another lasting impact on markets from the past 2 weeks?
Well, even if there isn't this huge contagion effect, or if the market wasn't resilient as Yellen says it is, I think one of the really lasting things we'll see here is just the staying power that retail investors have. Even when Robinhood was limiting how many people could trade, or rather how many shares they could buy, we still saw more and more people downloading Robinhood, trading on them. I should say it's not even just in the US. The number of UK investors who are downloading and spending money on these retail brokerage accounts, that has equally skyrocketed, especially among that age group, the white line, the 18 to 29-year-olds. What impact does that have on the market? That's more of a tricky one to dissect. One thing that's been extremely clear is this is having an impact on the options market. The volume in options is incredibly high now, to the extent that for every 10 normal cash shares that are traded, there are 12 options being traded. Usually there are way more options being traded than cash shares, but that has been completely flipped on its head over the past few months, and this past 2 weeks only increased that. So if you are someone who participates in the option market, clearly this is going to change things for you. But from here on out, how it affects people like hedge funds and that sort of thing, that is just being very highly debated now, because is this a flash in the pan, or are we going to see more GameStops here on out?
So, but Danny, now that GameStop has fallen so much, who's been left holding the bag? Holding the bag, by the way, is such a British-American expression. So for our international audience, it means either, I think, holding the bag of like stolen goods or worthless stocks.
Yeah, exactly. I mean, yeah, holding the bag, I guess it depends what kind of bag it is, if you want to be holding it. But yeah, in this case, holding the bag, I guess still holding on to GameStop and losing a lot of money. You know, it's hard to know exactly, but there surely are a lot of retail investors here who have lost an incredible amount of money. Now, you hope that the money they spent on it, they viewed as gambling money, perhaps didn't mind if they lose. But if you look at these Reddit message boards, you have people trying to almost one-up themselves, say, I lost 500, well, I lost 25,000. Of course, we can't verify those numbers, but the sentiment seems at the moment that there are a lot of retail investors who up to this point have gotten burned on their investment, Francine.
Danny, thank you so much. Danny Berger there with the very latest on what we saw with Reddit. Now, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York. It's a U.S. job, so we'll look at that. A number of other things we're watching is, of course, vaccines, with J&J applying for emergency use of its vaccine in the U.S. That would be a game changer. It's a one-shot vaccine if they do get approval. We look at the spat for vaccines in the EU. And, of course, we look at markets across the board, looking at better-than-expected earnings. This is Bloomberg.
another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television. U.S. stocks hit a record high. Market attention now turns to January's jobs numbers and sign of a healing labor market. Janet Yellen says market infrastructure was resilient during the GameStop frenzy. Esther George tells Bloomberg vigilance is the key. And Bitcoin struggles to extend its record-breaking rally. Reddit favorites like GameStop and AMC are higher after Robinhood scraps limits. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. Tom, we have a number of stories that we're watching out for. Of course, it's U.S. data and what it does to the markets. Given we had quite a lot of good news in terms of earnings, did you know, Tom, Peloton is running out of bikes?
Yes.
I mean,
yep.
I know you and I don't use them, but they're very popular.
No, Farrell has 3. This has been part of it. He took one to Capri, but brought it back with him. This has been part of it, Francine, as we're running out of supply. This Ford Motor story from yesterday, the day before, where they're running out of semiconductors, is indicative of so much of the logistics challenges of a recovering economy. You really wonder how that's going to dovetail into what the markets are doing and maybe better pandemic information.
Yeah, maybe. And we look at, of course, you know, what central banks do here in Europe after that warning from the Bank of England about negative rates. Now let's get straight to the Bloomberg. First for news in New York City is Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, a strong jobs report could doom President Biden's $1.9 trillion stimulus proposal. We get the numbers for January at 8:30 a.m. New York time. The president already is facing pushback from Republicans over the plan's size. He'd get more if there's a strong jobs number. Economists estimate that payrolls rose by 105,000 last month. The House has voted to strip Georgia Republican Marjorie Taylor Greene of her 2 committee seats. That's for embracing conspiracy theories and violence against Democrats. 11 Republicans voted with the Democratic majority. Earlier, Greene said she disavowed her previous views. The UK will require travellers from coronavirus hotspots to quarantine starting February the 15th. Arrivals from countries on the UK travel ban list will have to isolate for 10 days in government-approved accommodation. Authorities are seeking bids from hotels near airports and ports. Meanwhile, Sunday's Super Bowl in Tampa presents an experiment in coronavirus immunity. The National Football League is hoping to avoid any large-scale outbreaks at the game. Overall attendance has been capped at 25,000, a record low for football's biggest event. The league has given tickets to 7,500 vaccinated healthcare workers. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Before I do the data, we need to put up a banner which says it all, and we forget this. It's a very elegant chart. I don't have the chart in front of me right now, but I do have the statement that it is a 9-year bull market. There's no other way to put it. It's a 9-year bull market. All the analysis, all the gloom, yes, the shock of March and the pandemic, It's a 9-year bull market. Let's look at that bull market right now. Gina Martin-Adams with us here in a bit. Futures up 14, Dow futures up 112. I won't give you the levels this time around to get to Francine. 21.78 on the VIX with all the GameStop gyrations. And that oil, almost $60 a barrel on Brent crude, 59.57. And the dollar noodling, but nevertheless stronger over the last 2 weeks. Francine?
Tom, I'm looking at the bull market, and you know what the bull market is looking at? They're looking at earnings, a little bit better than expected, certainly yesterday in the U.S., and it's now filtering through to Europe. They're also looking, of course, at signs of a healing labor market. So Treasury steady after this widely watched segment of the yield curve steepening to levels last seen since 2015. And then I also put crude oil for a good measure, advancing, and gold steady after Thursday's decline. So jobless claims falling to the lowest level since November as global vaccinations topping confirmed cases signal a turning point in the pandemic. This as the main event comes into focus. Investors shifting their attention to the payrolls report, expecting the economy to add 100,000 jobs after a negative December print dampened recovery outlooks. Well, we're with Paul Donovan, UBS Wealth Management Global Chief Economist. Paul, as always, thank you so much for joining us. Are we optimistic about a recovery in jobs? We don't know whether the new vaccines work with the new strains, and we actually don't know what the rollout will look like going forward.
So I think we can be fairly optimistic on the jobs report with a couple of caveats. So the cyclical improvement, I think, continues. Remember, people were getting their stimulus checks in January and early in January. This money was being rolled out very quickly. You give an American $600, they will spend it. And that's essentially what we think has been happening. So that's been supportive and should filter through into the labor market. But we do have these caveats. So the first is there is a lot of structural change going on in the economy, the US and elsewhere, and that's going to create some structural longer-term unemployment, particularly amongst mid-skilled people. The second thing is that we have had an absolute boom in business creation, and I don't think the jobs report's going to pick up on that. So the jobs report potentially is underestimating some of the improvements in the labor market because it doesn't recognize the astounding growth in business creation that we've had in the United States over the last 4 or 5 months.
Paul, what does that mean for the price for dollars? So first of all, if we have inflation, and this was maybe one of the the biggest things that we were watching in terms of reflationary trade, is there not a danger that central banks then actually reverse some of the monetary stimulus? So, meaning that markets would actually go down.
We are going to get inflation. Over the next 4 or 5 months, we've got 2 drivers of year-on-year inflation. So the first of these is the oil price. We all remember the oil price was negative second quarter last year. The base effects of that are going to come through. Second, we've got a degree of inflation because we've got to reweight the indices. The CPI basket hasn't reflected the fact that everyone's changed their consumption patterns. And so that's going to be a one-off technical adjustment. We've just seen that happen in Germany. Now, the thing is, central banks know these are temporary factors, and I don't think they're going to worry about that. I don't think they're going to be changing the signals that they're giving in terms of policy. We are, as Tom was mentioning earlier on, we're seeing these problems come through in supply chains, absolutely, but that's about goods. And we've got an enormous amount of spare capacity in the service sector. And remember, services are far more important to inflation, far more important to the economy than our goods. So what I've got there is more a relative price pressure rather than a generalized inflation pressure.
Paul, Tom Keene in New York, wonderful to have you with us. And folks, I can't say enough about Mr. Donovan's wonderful effort on Profit and Prejudice. Profit and Prejudice, it's a really important book because, Paul, you drag in the social construct with all the markets and the economics that we see. You talk about the revolution has started. I want you to adapt the thesis of your book, the prejudices we have, the Luddite nature of this 21st century, into getting the market call wrong. What do we risk there?
I think the risk is really around the fact that if we see prejudice rising in a society, what that is going to do is undermine the ability of that economy and, of course, the companies in that economy to use the new technology properly to enhance profitability and enhance efficiency. The fourth industrial revolution, this structural change that we're going through, has huge potential to increase efficiency, not in just in terms of economic efficiency, but environmental efficiency. If you've got prejudice, we get that wrong, and that's going to be a serious problem for investors.
Paul, what's so important here, and this goes to chapter 1 of his wonderful book, folks, is, and I think of Megan Desai at LSE on this, the importance of profit, our unimaginable understanding of the FANGs, the big technology companies' profit as well. Do we grossly underestimate the profits to come when we sit in cash worried about this wall or that wall?
I think there is a tendency to underestimate, but there's also possibly a tendency to misdirect. The technology is always the exciting, dramatic part of what's going on. It's shiny and it's new and it's innovative, and look, I've got the latest smartphone. Economists don't care about any of that, nor should the markets, because it's not the technology that really offers the potential. It's what you do with the technology that really is disruptive and really offers the potential in the economy. So look, here am I working from home. I'm using a laptop which is 3 years old, a webcam which is 2 years old. I'm hardly cutting edge technology. But the disruption of my working from home rather than an office in London, changing consumption patterns, changing demand, that's the key thing.
Paul, are you using the Bloomberg terminal?
I'm using Bloomberg Anywhere, of course.
Okay, thank you. Good. That's all I wanted to know. Francine?
I mean, the software, Paul, though, I hope gets upgraded, right? You may be using, hardware that's 2 or 3 years old, but the Zooms and all of that are actually up to date, and that's probably where the bigger money is. Is there a worry about displacing even more workers? And is that going to be, how much of a drag is that on the economy?
Every time we have structural upheaval in an economy, the fear is the machines are going to take over. That's the Luddite revolution of the 1770s. The machines are going to steal our jobs. To the robots are going to take over. Well, the robots are not going to take over. Jobs are going to change. About 10 to 15% of jobs are going to be lost, but we're going to create 10 to 15% of jobs that don't currently exist. So it all comes out as a wash overall. The problem, of course, is that if you don't have flexibility in your workforce, and in particular, if you've got prejudice, which is preventing the right person getting the right job at the right time, then the people who've lost their jobs are not going to be able to find new work, and you're going to get shortages in other areas of the economy. You get an imbalance. And that's what governments, in particular, have got to start focusing on.
Thank you so much, Paul Donovan there of UBS Wealth Management, staying with us. Now, later today on The Open, we also have a conversation with the U.S. Council of Economic Advisors member. She is Heather Bushi. That's at 9:45 a.m. in New York, 2:45 p.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions. We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
I think it is true, of course, that when you have ultra easy financing conditions for a long period of time, it can create incentives to reach for yield. It can cause some to misprice risk in markets. The real priority right now has, again, been addressing this extraordinary shock. And the Federal Reserve right now is far away from what I would say is achieving its objectives.
Mr. George of Kansas City and, of course, the Jackson Hole meetings where there always an historic template from Kansas City of an agricultural America, or maybe a more cautious, less financial view than what we hear, certainly on the East Coast. That was Kathleen Hayes here a bit ago. Paul Donovan with us with UBS Wealth, looking at the toolkit that President George has, that, the governor of the Bank of England has as well. With a recovery, how restrictive, Paul Donovan, is the toolkit of our central banks?
I think part of the problem is this really isn't a central bank crisis. I mean, central banks are there to assist, absolutely. But this is very, very much a fiscal policy situation. I mean, let's look at what happened. Governments took money away from you. That's what they did. They said, no, you can't work. Businesses, you've got to close. That's governments taking money away. It's down to governments to give that money back and to open up the economy when it is safe to do so. Changing the cost of credit, that's not going to make a difference here. And in fact, with the structural changes that we're seeing, I think the cost of credit may become less significant, at least for businesses, because there's less need to invest now. If all your staff are working from home, you don't need to build a new office building. You don't need to build a new store. You've moved online. So we're seeing shifts in terms of investment behavior anyway. This is really about fiscal policy and governments giving back the income that effectively they've taken away from the economy.
Can we impart fiscal good on the part of society that we want to? Is fiscal policy such a blunt instrument? It really doesn't get the job done?
I think fiscal policy can get the job done. I mean, there's always going to be a certain amount of error. I mean, centralized government trying to run something as complex as an economy. Of course, there's always going to be shouts of, oh, this is fraudulent, or that person's got money they shouldn't have got, or that person is suffering and they should have got money and they're not being supported. So you're always going to get these stories, and particularly in the modern social media age, they're likely to be magnified. But broadly, I think governments can do the right thing. They can provide support to the people who need it, and they can make sure that once restrictions are lifted, the viable parts of the economy can get back as quickly as possible. And then what governments have got to do is look at the declining parts of the economy, the parts of the economy that have got no future in the fourth industrial revolution, and try and mitigate that damage and help the people involved.
Paul, when you look at the wobble in activity in China, does it really spell trouble ahead for the rest of the world? Because we need China to be strong to try and actually get out of this economic slump.
To be honest, I'm not sure that China is going to play a very big role in driving the European economy or driving the US economy. It simply doesn't buy enough from Europe and the United States for its own consumption to make much of a difference there. It makes a difference to the global growth aggregate, but that's just a meaningless number. I mean, nobody cares what the global growth aggregate is. It's what's going to be driving Europe and the United States that's going to matter to Europeans and US citizens. So I think that China is important because in some regards it is a signal of what is happening elsewhere in the world. If we start to see Chinese exports falter, for example, that's a signal of a decline in demand for goods that's important to investors, important as a signal of the health of the rest of the world. But I'm not looking for China to pull up European growth or pull up US growth. I don't think that's particularly likely.
Paul, what are you expecting from Joe Biden in terms of stimulus? Will the U.S. fare much better than Europe in the next 12 months?
A lot of the US stimulus, we've got to remember, is a game of catch-up. Because a lot of the US stimulus actually isn't stimulus at all. It's an antidepressant rather than a stimulant. Over the course of the later stages of US President Trump's administration and now with President Biden's administration, what we have been seeing is a scramble to sort of build the welfare state that Europe has already got. So a lot of what we've been seeing, the unemployment benefits, the classic example, this is just a transfer payment. That's not a stimulus as such. That's preventing things getting worse rather than pushing things up. So what we really need to see with this next package is what is the breakdown between the sort of the Prozac antidepressant policies versus the Viagra stimulus policies. That's the balance that we need to see. Markets are looking for the stimulus. They're not pricing in downside risk. They want to see the stimulus coming through.
Paul, one final question. It's an unfair question, but it's Unfair Friday. What is your timeline to where we need to frame when central banks will begin to act? Is it a 2021 timeline? Are you out like a Draghi headline of old to 22 or 23? Or is a Donovan preview out to 24?
I think central banks are at least going to start talking about quantitative policy and what the appropriate quantitative policy is in the second half of this year. Now, we're already hearing some of that. We've had some Fed presidents talking about it. Bank of Canada's talked about it. The Bank of England's hinted at this. So I think there'll be a more intense discussion about scaling back quantitative policy in the second half of this year. And then it either happens right at the end of this year or maybe at the start of next year. But if the economy is recovering, you don't need the quantitative policy that you've got today. So I don't see that as being a particular problem. It's a balanced approach.
Paul Donovan, thank you so much. And folks, a rave review for his wonderful new book. It is really, really thoughtful on society and all that we see. I'll put it out on Twitter here this morning so you can grab it out on the social feed as well. He is, of course, with UBS. It is Jobs Day. We'll go beneath the headline date at 8:30. Cirilli, he is the best guest of the day. It's always that way. Sound on Kevin Cirilli, Bloomberg Radio. The gentleman giving advice to the President of the United States, Dr. Bernstein, Jared Bernstein of the Council of Economic Advisors. Stay with us. This is Bloomberg. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg Business Flash. It's the biggest internet IPO since Uber went public in 2019. Shares of Kaisho Technology rose 161% in their Hong Kong debut. The company operates one of China's most popular short video services. Kaisho brought in $5.4 billion in the IPO. It attracted hundreds of billions of dollars of orders. There's speculation that Apple is seeking a partner to develop its own electric car. According to the Wall Street Journal, South Korea's Kia Motors is talking to potential partners about a plan to assemble an Apple-designed car. Meanwhile, Japan's Nikkei newspaper says Apple is in talks with at least 6 automakers. And shares of GameStop resumed falling. The video game retailer fell 42% yesterday, pushing its collapse past 80% this week. Retail traders using Twitter and Reddit to communicate are now moving on to other sectors of the stock market, such as small drug developers. And that is your Bloomberg Business Flash, Francine.
Thanks so much, Ritika. Now, this is what the picture for the market is. Again, Tom, we're in a whisker, to these record highs, and that's the overall context. So we talk about up and down, but actually the overall trend is actually, bull, bull, bull. European stocks climbing today. This is on the back of Wall Street higher. There are signs of a healing labor economy or labor market. We'll see if the U.S. jobs data also supports that. And we had some pretty healthy corporate earnings. Crude oil advancing, gold steady, Tom.
Yeah, Brent crude right up buttressed against 60. That gets my attention, 59.47. I'd also note that euro below 120 sustains for day 2 as well. Euro dollar right now 119.76. It is jobs day. We have a wonderful lineup to give you the perspective you need for this Friday, for your weekend reading, and quite frankly to stagger to March. Can you believe we're already talking about March? We will march to jobs day with Ellen Zettner of Morgan Stanley. This is Bloomberg. Good morning.
revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Bloomberg surveillance on a jobs day. Good morning, everyone. Good economics coming up here as we look at the American labor economy. A lot of other stories. I know we're going to drive forward to an update on Italy, an historic week for Italy. Francine's interviews with prime ministers. Do we have a prime minister today, Francine? Another prime minister?
I couldn't have. I couldn't find a fourth one for now.
Okay,
well, maybe one day, Tom.
We'll drive forward the conversation here on Italy in a bit. Right now in the markets, Marcus Ashworth joins us with Bloomberg Opinion. Marcus, I went back and did a fancy moving average study, and basically we're in a 9-year bull market. Why is that? Why do we have a 9-year bull market?
It's because the world's such a beautiful place, or is it because the Fed and other central banks have just pumped stimulus in ad nauseum? I think it's possibly the latter. And look, you saw Esther George saying, that they haven't reached their goals yet. More's coming. We know that certainly another $1 trillion is going to go in this year at least, probably up to close to $8 trillion on the balance sheet at the Fed. And we know the same's happening in the rest of Europe and the UK as well. So it's more stimulus. Infinite money against finite assets equals rising markets.
Rising markets, we see it in earnings, but we also see it in revenue persistency. From where you sit and reading all the research, is it a surprise here this year that we get a revenue build as well as earnings?
Well, we've got extraordinary. We haven't had. You look at the default rates, bankruptcies are falling in a massive recession. I mean, we've had this huge arms around, as you want to call it, from governments, from fiscal policy, which is not really properly kicked into life yet. I mean, we've got more to come. We know, certainly we hope from the U.S. We certainly are going to need, I think, a bigger recovery fund, a top-up, a big one, probably a doubling in Europe. And I think there's more to come elsewhere. So there is that feeling that corporates have done pretty well in a very, very difficult times. They've been supported and nurtured, and we are expecting all the savings that build up. We're expecting even more consumer-driven sentiment boosting retail sales to come in the next second and third quarter.
So what does that do to inflation, Marcus?
I don't think it does a huge amount. The generic problems or causes of deflation, which is a globalization, is technology, is a raft of different other improvements going through. I think it's still much bigger than short-term, outside influence-driven inflation, which is cost push essentially, which central banks have done enough research now to look through. You look what happened in European inflation, this week. It's very strong. Yeah, everyone rightly, I think, is looking through it. It's just basis effects of VAT, sales taxes, and a raft of other different sort of lack of discounting because there weren't sales to go to, which is causing it looks like a big boost in inflation. It's just correcting it. It'll go out through the system out the other end in a few months' time.
Marcus, is there something that we're underestimating the danger of? We still don't know whether the vaccines really work against the new variants. Some countries are very slow in the rollout of the vaccines. We don't know how many will be produced. We don't really know how many zombie companies, frankly, we'll be left with. And yet we see record highs for equities.
Yeah, the real risk is one of my old colleagues at work. I started working with in 1987. Wrote a very scary Cassandra-like column for us this week, basically worrying that at some point the Fed will own this huge expansive stimulus, and at some point they won't be able to prop the markets up, and it will all come crashing down. But for the moment, it's not quite yet, and until we get any real evidence of this, I think the combination of central banks with governmental fiscal policy means that the markets are set fair. So I remain bullish, though very nervous that we are at some point going to have to pay the price. I just hope it won't be for another year or two.
In February, Marcus, I'm hesitant to introduce my chart of the year, but it's maybe the chart of our lifetime. I do this for the wonderful new movie, The Dig, folks, about the digging up of Sutton Hoo. Marcus Ashworth was there in 1939. Just to the right of 1939 in the Depression is the bottom, the worst moment for the Western world, and that was what I call the Guadalcanal low of 1942. And then essentially it has been a mother of a bull market. And that's what GameStop and other shorters are fighting all along the way. Marcus Ashworth, when you have the mother of all bull markets for almost a century, It's tough to make money shorting, isn't it?
It is, but then again, some of these people were up for recently were very skilled at it. I mean, yeah, it's a skill set which is required, I think, to keep that disinfectant going through the markets, to make sure there isn't just outright, belief in everything will go up, because that is what simply has grabbed the Redditors, and they've had fun while it lasted. It's ended now. I hope everyone will be a little bit wiser, maybe a little bit bruised, but we will at least believe that short selling has a function, because I really think that's something we must keep in mind.
And that optimism of that chart against the idea of going to cash and even more staying in cash. Marcus Ashworth was with wisdom, particularly as we saw GME and the others blowing up last week. Futures up 16 on this jobs day. With our first word news in New York is Ritika Gupta.
Thanks, Tom. Well, starting with that, today's jobs report is a crucial one for President Biden. The median forecast in the Bloomberg survey is that the economy added 105,000 jobs in January. But if the number is much larger than that, it could doom the president's $1.9 trillion stimulus package. He's already facing pushback from Republicans who think the proposal is too expensive. Treasury Secretary Janet Yellen found that the stock and commodity markets remained resilient during the recent trading volatility. That's after she met with the government's financial regulators, and she's called the meeting after surges in stocks such as GameStop and sudden trading curbs on smaller retail investors. Donald Trump has refused to surprise a call for him to testify at his impeachment trial next week. House impeachment managers issued the request. The former president's lawyers called it a public relations stunt, and they repeated their claim that the impeachment trial is unconstitutional. And German Chancellor Angela Merkel warns that it's still too early to ease the lockdown in Europe's biggest economy. The pandemic is starting to show signs of slowing down. Still, Merkel says that she wants the economy to open without having to close it again soon. Merkel and regional leaders meet next week to decide the next step. Global news 24 hours a day on air and at Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Francine.
Ritika, thanks so much. They call it continuing debate. You called it in college pulling an all-nighter. It is the Senate, with the gentleman from New York speaking now of the triumph for his Democrats of adopting a budget measure to fast-track the Biden stimulus plan. Very importantly, Vice President Harris with her key vote. Stay with us. Let's listen.
Hopefully put it on the president's desk. A month ago, today, 2 senators from Georgia, 2 Democratic senators were elected. And just a month from that day, we have taken a giant step to begin to fulfill our promise to the American people that the Democratic Senate, the Democratic House, and President Biden will have their back and move them forward during this awful crisis. So, Mr. President, I ask unanimous consent.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport industry buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Bloomberg surveillance, an all-nighter for the Senate of the United States. Joe Biden is vice president. He had no tie-breaking votes in the Senate. That was the count at the time, and would see the first tie-breaking vote by the vice president of America, and of course head of the U.S. Senate, president, I should say, of the U.S. Senate. This is moving the budget forward for the majority Democrats in Washington. An historic first moment for the Biden administration. Futures advance off of the news, up 17. Francine?
Yeah, Tom, it feels like an EU summit. I think there were, it's nearly 15 hours of wading through amendments from both parties. And again, as you say, Vice President Harris passing this tie-breaking vote with the GOP opposed. Again, Democrats face down amendments on taxes, immigration, and abortion going forward. Now, we'll hear, of course, a lot more on the situation in the U.S., and I guess linked to it is a bit of political turmoil in Italy. Mario Draghi, the former ECB president, meeting with a number of political experts at the moment to try and figure out what he does in terms of his government, whether he goes technocratic, 100% technocratic, or whether he wants to try and get also a little bit of political support as well. Now, Italy's outgoing premier, Giuseppe Conte, signaled his lukewarm support for a Draghi-led government, calling for a political government rather than one made up of technocrats. We've also spoken to a number of prime ministers in the last couple of days to understand exactly the challenges going forward. I'm delighted now to be joined by Fabrizio Pagani. He's at Music & Co., a global head of economics and capital markets, but for many years also at the Italian Treasury, so he really understands the money aspect that Italy has to deal with. Fabrizio, thank you for joining us. How crucial is it that actually we have some kind of legitimacy with politicians in this new government? Is it a good idea, or does it mean that it'll be more difficult to take the tough structural reforms needed?
Thank you, Francine, for inviting me. I think what is important is that the new executive will have a majority in government and a majority which is as broad as possible. Then it will be up to the leadership of the government to decide, together with the parties, whether you will have ministers who are coming from the political ranks or not. But I think what is important in this moment is that this new, this new possibility, the fact that we have Draghi as a possible next prime minister, which is a kind of big change, under several angles and perspectives from the previous government, is somehow metabolized by the political system. It will take some time. So we are not yet there. I think they will, Mr. Draghi is doing consultation with the parties today and tomorrow. There may be a second round of consultation early next week. But the public opinion is definitely behind this new project. The president of the Republic, Sergio Mattarella, is obviously in full support. So it's, as I said, you need a bit of time for that to mature.
Fabrizio, I know for many years you were working at the Treasury, so again, you understand, how much money Italy has, and at the moment, how much it has to spend. How, if Mario Draghi cannot put a parliamentary government together, or get the support of Parliament, what happens to Italy?
Well, I think the backlash on markets will be brutal. I think markets, they are somehow very much helped and lifted by the heavy hand of the ECB. But at the same time, now they have a new perspective, a perspective of a government which is firmly committed to structural reform, to bring back growth, to address the knots and to solve the knots which are being on which the growth of Italy has been stumbling on. So the market will be, seriously disappointed if the project doesn't go ahead.
How does Italy, on a generational basis, get to a better domestic government? How do they do that with a shift from the habits of the old to whatever the new will be?
I think there is a lot of frustration in the new generation in Italy, Tom. You are right. And you see that also in the rates of people leaving Italy. This is bad also because the country is not receiving enough new people and fresh skills and competence from abroad. So only a new perspective, a change of page as the one that Mr. Draghi can ensure could really end this frustration or ease this frustration. Then of course you need the reforms which will help the young people to find the right jobs. You need a skills strategy. Italy is one of the countries which has the most problem in training across the OECD countries.
But Fabrizio, why do markets think that actually Mario Draghi can be any better at this than Mario Monti was? The Italian politics has a very single peculiarity, is getting people that are very well respected in international institutions, turning them unpopular and tying their hands.
Well, I think the situation between Mario Draghi and Mario Monti is quite different. At that time, Italy was really in a dire fiscal moment. There was a need for a very severe fiscal consolidation. It's not the case right now. At the time, also the international stance, the fiscal stance at the international level was quite different. Today, we are still in a very expansionary moment across Europe and across the United States. You just mentioned the possible Biden package. I think building on that and using this window of opportunity that we have, a new executive could really do the reform which is necessary. Structural reforms and investment, which is also what the European Union is asking and why is providing, the reason why is providing the resources under the Recovery and Resilience Facility.
Fabrizio, thank you so much, as always, for your insight. Fabrizio Pagani there, Muzinich & Co. Global Head of Economics and Capital Market Strategy. Now, coming up next, Rabila Faruji, High Frequency Economics, Chief U.S. Economist. We talk about jobs, and we talk about the stimulus bill. This is Bloomberg.
Focusing on is not so much what goes inside the cars of the future. So they're not working on doing a self-driving car or an autonomous vehicle themselves, but rather they're focusing on the surroundings. So everything that's going to go on outside the vehicle in the future. So that's sensors, cameras, radars that are embedded into roads, street signs, traffic lights, bus stops. Infrastructure that's going to provide information, something to help the vehicle know what's going on around it, to help it, stay on schedule if it's a bus, or avoid other vehicles, avoid accidents, provide information about weather conditions, potential hazards down the road, and so forth.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Keene in New York. Futures with a nice lift up 18. The Senate moving forward the Democrat legislation off the tie-breaking vote of the vice president. Right now, I've really been looking forward to this. Rubila Faruqi is with High Frequency Economics, holding court with Carl Weinberg, and she joins us right now. Rubila, you wrote a really nice short note on American productivity. We're going into Jobs Day. Everything's been turned upside down by the pandemic. With the new technology, the new things we're learning within this pandemic, will it help and benefit our productivity, or is there a long-term structural harm?
Good morning. Thank you for having me. I do think that there are a lot of issues going on with the pandemic that are going to change the way the economy operates, and it will have implications for productivity. I do think the structural issues are still in play. But, in the short term, I think there's a lot of noise in the data. And I also think that company operations have changed quite a bit in terms of accelerating. The pandemic has accelerated the pace towards automation and adoption of new technology. And that should have implications for productivity. But it's still unclear, how this is going to pan out.
If we get a 1.x trillion stimulus bill, if the Democrats reconcile through to a second, let's say, infrastructure bill, are we drowning in a government impulse? Is it almost too much money 6 months or 6 years down the road?
Well, I think the need is critical right now, and it is the right thing to do. And the Biden administration has been very clear that they would like to do more rather than less. So I do think that there is a need for people who are out of jobs right now. They need income support, and businesses need help too. How much more we need to do, that is debatable. I think sending out, a lot of support to households that have not been impacted by job loss, maybe the aid is better directed. So, yes, we do seem to be heading that way. There is no choice out of the options that are available to us. This is the better choice to do more.
Rubila, what kind of jobs are we creating? Is it quality jobs? The jobs market could be getting better, but if it's about creating 2 million more, Uber drivers or Amazon deliveries, it's not necessarily what people will want going forward.
Right. So I think that is what the focus should be on any infrastructure package that does come through. If the pandemic has taught us anything, it's the fact that there were a lot of low productivity jobs that were lost during the last year. And, companies have switched to new technologies and have probably become more efficient as a result. So, we need to focus on retraining. We need to focus on programs that will, bring back jobs that are not low productivity, that the economy obviously can survive without.
Will, Rubila, the Biden administration focus on that?
It is my hope that they will focus on it, but right now they seem to be focused on passing through the $1.9 trillion stimulus package. We have very little details on what else might be in the pipeline, but it is certainly the hope that we bring back as many people. That's been the Fed's focus. We bring back as many people as we can. Now, that doesn't mean that low-income, low-skill jobs won't come back. They will, but not all of them will. And there is a need to get everybody back into the labor market, or as many people as we can, as soon as possible.
What are wages doing?
Wages right now, the numbers are being distorted by what's happening with low-income job loss. So we're not really getting a very clear idea of what's happening with wages. But we will see once we open the service sector back open and a lot of these low-income jobs come back, we will see wages diminish from the levels that
but are they going to, Rabila, I don't mean to interrupt, but we're almost out of time. This is really, really important. Are we going to get a fully employed economy, as John Hilsenrath writes up in the Wall Street Journal today? Are we going to get a fully employed economy with next to no wage growth like we had before?
That is entirely possible. Just given the dynamics of the labor market and what we have seen in the past, we could absolutely see full employment with low wage growth.
Strange. Rabila, this has been wonderful. Don't be a stranger. Rabila Faruqi with us with High Frequency Economics here on Jobs Day on productivity, which we don't talk enough about. Futures advance up 17, Dow futures up 132. Francine's in charge of record highs. We're in the vicinity of record highs of that. Francine, the VIX says 19 or 18 to me. We're only at 21.75. I'm going to blame that on GameStop.
Okay, I'm just looking at actually what was just voted in the Senate, Tom. Maybe if you look at that, it just gives us a good indication of what the market is focusing on, right? So the Senate voted 51-50 after Vice President Kamala Harris broke her first tie. Again, it follows nearly 15 hours of waiting for amendments from both parties, and basically we now have a blueprint for this major stimulus.
Yeah, I'm calculating right now that trade I did at 500 on GameStop. I mean, it's like literally off the Bloomberg terminal chart. I can't calculate how much I've lost, Francine.
Yeah, Tom, a big Reddit user with his 12-year-old daughter.
That worked out. On Jobs Day, what a lineup. James Glassman, Ellen Zentner with us from Citigroup. Catherine Mann this afternoon. This is Bloomberg.
We have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast. And it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
This morning, stock futures, they advance and advance again on earnings on better pandemic news. Brent crude just under 60 the barrel. President Biden, well, he wants an America of, quote, full employment. It is jobs day. Chair Yellen, well, she found slack in the labor economy. Secretary Yellen finds slack in this pandemic economy. We'll go beneath the headline data at 8:30. And this just in, September 11th, 2001, quote, absolutely happened. Still, a first-term Congresswoman is tossed off budget in education. Meanwhile, all-nighter on the Senate floor, coffee was served. They're going home in the early mornings of Washington. The Democrats move ahead on stimulus. Good morning, everyone. Bloomberg surveillance from London, from New York. The news flow is absolutely extraordinary. Francine, we're not talking about
the
this.
Votorama.
It's a Votorama. Yeah, we'll get to that with
15 hours.
With Martin Schenker. Look, I want to talk about this because we've ignored it. You're going to do a 10-day quarantine in London, where other nations do like a 4-day or whatever. What's the draconian nature?
So there are a couple of things.
Weekend?
I want to go back to the stimulus, Tom, because it's actually interesting, but very quickly on quarantine. So the UK is doing something that you see, for example, in countries like New Zealand or Australia, which says if you come from specific countries, other countries where we found variants, you can come in the country, we put you in a hotel, unclear who's paying for the bill, but we put you in a hotel for 14 days. Or actually 10 days, and we monitor you, right? This is basically just the only way that they think they mitigate the concern about, not getting enough traffic, whilst at the same time making sure that the rest of the population is safe from various variants. But, Tom, the other thing they're working on is to try and get people passports. So if you're vaccinated, you have an immune passport, and potentially you could go on holiday, for example, in Greece over the summer. Yeah,
that's percolating here as well. I've got a second shot of the vaccination coming up in like T-minus 8 days. I don't know what it is. We'll get to it
going on holiday
in a moment. She had to blow up the news this morning. Senator Schumer and Vice President Harris making key votes. With our first word, stimulus news, here's Ritika Gupta.
Thanks, Tom. A 15-hour session in the Senate ended with lawmakers adopting a budget blueprint for President Biden's $1.9 trillion stimulus plan. The vote was 51-50, with Vice President Kamala Harris breaking her first tie. The House will likely vote Friday to adopt the Senate's language that would allow Democrats to approve the stimulus without Republican support. And the House has voted to strip Georgia Republican Marjorie Taylor Greene of her 2 committee seats. That's for embracing conspiracy theories and violence against Democrats. 11 Republicans voted with the Democratic majority. Earlier, Greene said she disavowed her previous views. And the UK will require travelers from coronavirus hotspots to quarantine starting February the 15th. Arrivals from countries on the UK travel ban list will have to isolate for 10 days in government-approved accommodation. Authorities are seeking bids from hotels near airports and ports. Meanwhile, Sunday's Super Bowl in Tampa presents an experiment in coronavirus immunity. The National Football League is hoping to avoid any large-scale outbreaks at the game. Overall attendance has been capped at 25,000, a record low for football's biggest event. The league has given tickets to 7,500 vaccinated healthcare workers. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. A data lift, and I want to make clear we saw a lift in a good futures market off of the vote on the Capitol. That was about 40 minutes ago. I'm guessing futures up 12, now up 19 new highs for the day. Dow futures up 141. I'm still not in the market. I'm looking for an entry point here. NASDAQ does a nice move as well. The VIX still 2173, but that's not a good number. As we get closer to the 9:30 opening, you're going to see the VIX make some gyrations. I wonder if we'll see a 19 symbol as well. We've got some other Brent crude. It's $59.44 a barrel. That's a higher oil price, which gets us up to a range where you can see some strategy by oil. Perchance, I am told by my team, Chevron will offer to buy Noble midstream, not downstream, not upstream, midstream at $12.47. This is Noble Midstream Partners, which I'm going to guess is an LP moving stuff around in the hydrocarbon business. The energy business percolates here, as we saw with Exxon and then downstream as well. I love saying that, Francine, the upstream, the downstream, the midstream.
You do a great job with that, Tom. You know what I'm going to call this rally?
I can BS my way on a Friday
Bloomberg
through
News.
anything.
Okay, the everything rally. And actually, that's really how I would describe the moves today. If you look at risk assets, really uniformly higher today. Global stocks, if you look at, some of the things that we're also seeing in the UK, they're just up, up, up. Again, if you look at global equities, they're set for the best gain since November. Oil, you mentioned it, nearing $60 a barrel. And again, it's a lot to do with earnings. We have that stimulus bill, earnings better than expected. And then if you look at oil, away from Chevron, 56.80, OPEC trying to rebalance the markets.
Giving us historical perspective on these changes in Washington is Martin Schenker, running our Washington operation for 12, 13 administrations, and of course, Bloomberg editor-at-large and managing the editing for it as well. Marty, I've got like 8 ways to go here. To combine the stimulus news in with the news of president's lawyers turning down testimony on impeachment, do you just assume that all this action on stimulus comes to a screaming halt while we go through a trial process in the coming days?
I don't assume it. It's what's going to happen.
Do you have a date for us? Is it Monday?
It's Monday, starting midday. As soon as the Senate convenes, they'll get into the opening procedures of the trial. They will conduct no other business until this trial is completed. It will be a much quicker trial than the first one, maybe as long as a week, maybe even less. But the Senate will conduct no other business while that's going on.
And then from there, they pick it up and ram through with reconciliation, not a filibuster, the budget process.
That's right. They'll need 50 votes to get through the Biden economic plan. The House may have to come back today and approve some of the language changes in this bill that the Senate just...
They're all down in Tampa Bay, waiting for Brady to win.
And what's up with that? How come we don't get to go to Tampa Bay?
Francine mentioned it this morning as well. I think Abramowitz is already down there.
We're essential workers, I'm told.
We are essential, yes.
Yeah, but you're waiting for the passport vaccine. Marty,
right.
There's very little chance that actually, the impeachment or that, Donald Trump gets convicted.
Right.
So why go through with it?
Well, that's a good question. And then many of the GOP senators are saying just that with their votes, that they're taking the position that impeaching a ex-president is not, is not constitutional, and they're just going to dismiss it on those grounds. So the Democrats feel they need to hold this president to account, and also they want to basically prevent Donald Trump from ever running again. It is a controversial move, and one that some people think is sort of against Joe Biden's move for unity, but it's going to happen, so we better get used to it.
Marty, on the stimulus package, so it's a giant first step. They talked for 15 hours, and it's a tiebreaker thanks to the vice president.
Yep.
Is this how business is going to be run, almost for the foreseeable future?
Well, if you go back to 2009, this is how essentially Obamacare got passed with no Republican support. Joe Biden, I do think, genuinely would like to have Republicans join it, his efforts to bring this country out of a recession. But, the sides are so divided here in the U.S., it seems unlikely he's going to get any Republicans to come with him.
I want to go back to something you and I have talked about before. And, where I said last night to someone, I said, it feels like we're 3 months into the administration. It's only been like 2.5 weeks.
It's amazing.
Or something. But seriously here, is this a president at 78 years old that has a unique or original urgency? Because he doesn't have the 4 years, he doesn't have the 2-year honeymoon. It's like go, 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 like we've never seen.
It is absolutely the case. And what I think has informed Joe Biden are the people around him who were there at the opening of the Obama administration, who remember that they tried to reach out to Republicans and it slowed them down. And they never got the Republicans to come along anyway.
Right.
So Joe Biden is taking their advice. He's just going full speed ahead. As long as they have majorities in the House and Senate, they're going to push this through. And the Republicans, some of them may come along, but it's not likely.
An unfair question, Marty, but I'm going to go with it because you're just so damn good at this. The zeitgeist in the evening last night was NSC to really take a new look at a new Iran policy. How complex is that for the administration?
It's extraordinarily complex. And don't forget, even though he isn't part of the national security apparatus, John Kerry is playing a key role here. He negotiated the first Iran deal. He really understands this issue. And it is very complex because there are people who think that we should not move at all to try and revive that agreement, even within the administration. So it's a very delicate balance he's trying to walk here.
Marty, how is the U.S., I mean, is the U.S. back in terms of foreign policy? You know, in the last, I guess, 15 years, the U.S. was always the big sheriff in town globally. Are we going to see that again?
Well, Joe Biden's speech at the State Department yesterday laid out a return. As he said many times, the U.S. is back. But if you're a foreign country, if you're dealing with the U.S., the experience of Donald Trump would give anyone pause whether or not whether Joe Biden is a return to normalcy, or just another blip before some other populist becomes president of the United States 4 years from now. So I think that those relationships are going to come back, but it will be not the same as it was before Donald Trump is president.
Who's the biggest problem for the Biden administration right now, China or Russia? Russia just jailed their main opposition, Mr. Alexei Navalny, for 3.5 years. Right. Is the U.S. going to do anything about it?
Well, I mean, they promised to look at further sanctions. It's hard to think of what other sanctions they can put on Russia. There are so many already. But I do think China is the short-term and the long-term biggest challenge to the U.S. I don't think there's any question about that, and I think that's the administration's view as well.
Let us circle back. You talked to Washington all day on the phone to Craig Gordon and our team down there. For those of us in the blur of the markets and distracted, is Washington still in lockdown? Are the fences still up? Is the view from the Hay Adams across Lafayette Park, is it an outrage of fencing?
Yeah. They haven't taken those things down yet.
They're all up. Capitol surrounded with fence.
Yeah,
this is America.
Yeah, it's an unfortunate thing, and in fact, the Capitol security apparatus has said that they need to probably install permanent fencing around the Capitol building for security, which is, in my view, would be a sad day for this country.
It would be sad. That would barely describe it. Martin Schenker with an update there this morning. Managing editor, executive editor-in-large, and he'll somehow get us to Saturday as well. Later today, Heather Boucher will be with us with the President's Council of Economic Advisors, that in the 9 o'clock hour. Futures large, up 20. The VIX 21.75. Again, I'm watching dollar noodling along, but you've got an equity rally. This is Bloomberg. It's Jobs Day.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
we remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Now, Tom, Carlsberg, the world's third biggest brewer, it's the maker behind Kronenbourg and Aldaris. Sales in the fourth quarter came in slightly below expectations. It does expect operating profit to grow between 3 to 10% in 2021. So we'll have plenty more, of course, on this. And we're delighted to be joined by the chief executive of Carlsberg. He is Kees Tacht. Thank you so much, Mr. Hart, for joining us. When you look at Carlsberg and actually the opportunities and the pitfalls that COVID have created, what are the real opportunities? I know you're saying the outlook is uncertain because bars are reopening, but we could go back into lockdown. How do you see it changing your business?
Well, we see a lot of opportunities because of COVID, although, of course, a beer business, which is about socializing, is impacted by COVID. However, we see underlying trends like the focus more on health and well-being, and that means that our alcohol-free beer range is doing extremely well. We grew by 11% in a COVID year. So the rest of the portfolio, the beer market was down, but alcohol-free beer was up by 11%. Craft and specialties were up by 1%. So despite the severe headwinds due to COVID, we also see opportunities. Also, we've proven that in 2020 our business is pretty resilient. So we are confident for 2021.